Josh Morrissey, welcome to Property Insights.
Grateful for being here, mate. Thank you for having me.
And when did you fly in from Canberra?
Last night, so drove up last night.
Oh, you drove, yeah.
Drove up and just staying at Double Bay down at the Intercontinental, so got a sneaky night away from the kids. It was good.
Yeah, cool. Did you bring your partner, Mrs. with you?
Just myself.
Just yourself?
Yeah.
She's back looking after the business. The business is called Hive.
It's called Hive.
As in beehive.
Yep.
But I guess that's sort of some sort of play on how busy you guys are.
Correct.
And you're in Canberra.
Yes.
What's your background? Where were you before Hive?
So before Hive, my wife and I were actually at a company called Luton. So it's like a big franchise business down there. We were there together. Before that, I was at a company called PRD. But yeah, about 5 years ago, Sam and I were working together. I thought it'd be a good idea to see if we could do that without killing each other. And the goal was to always start the business. So we thought we'd try that for a year and worked well. And here we are, 4 years later, 24 staff and going well.
So you're specialising, I guess, Canberra, it's ACT. I mean, you specialise in residential property?
Residential sales and project marketing. Split it 50-50.
Yeah. And but residential sales in the ACT or just Canberra?
The ACT, so region and Queanbeyan and surrounds.
Okay, Queanbeyan being a pretty big regional city.
Yep.
So how's the property market in Canberra going?
It's probably not too dissimilar from everywhere else. I'd say since the last rate rise, we've seen the confidence shift almost overnight. It probably had.
You mean to the February rate rise?
Correct.
Yeah.
Pardon me. And I'd say the biggest shift is probably days on market. So days on market's gone from sort of end of last year, sort of 30 days on market to double, probably sitting at about 60 to 70 days on market at the moment. And the average sale price has dropped from sort of north of 1.1 down to about sort of just south of 900. So
this is houses, I
That's houses. Yep. So that's been incremental probably over the last 3 months. But obviously the serviceability of the buyers has dropped pretty much pretty much instantly, which we've noticed since the rate rise. It was almost within 24 hours. We had buyers pulling out of deals and banks calling us saying that buyers are re-rated, like I said, almost on the spot. And we've seen that confidence just shift. We've got probably half the amount of buyers coming through open homes that we did probably 3 months ago. Half the amount of buyers attending auctions, and auction clearance rates are at about 50%. So we're definitely seeing the rate rise hit the market pretty hard.
So let's just unpick it a little bit. So let's look at houses first in Canberra. The average price of a house that you sell in Canberra relative to the average price of a house in Canberra, what are we talking about?
Mine's probably 1.5 to high ones, thereabouts. Average sale price in Canberra is about 900.
Yep. So you're sort of selling slightly above the market?
Slightly, yeah.
Yeah. And in terms of units, apartments, there's not a lot of units in Canberra, but let's talk about it. There are more units now than ever before.
Slow.
There's
been a lot of development over the past 2 or 3 years.
Yep.
So probably a bit of a higher supply than demand at the moment. But that actually units in Canberra saw the highest capital growth in the last 18 months than it did over the last decade. So there was a bit of a spike in purchasing. But now we've seen that drop off.
Right. So what's the average price of a unit? Like you were talking about 2-bedroom, maybe a bathroom and a half or 2 bathrooms.
Depends where you're buying. I think average price probably sitting in the high fives.
Yeah.
For a unit.
That's just sort of pretty reasonable.
Yeah.
Relative to what you pay anywhere else, except for Adelaide and Perth. But yeah, so that's pretty reasonable. And I mean, some of the stats about Perth and that Canberra I know about, for example, generally speaking, well, up until more recently, is zero vacancy rate in terms of tenancies. Mm-hmm. So if you're buying a house for an apartment, you're more than likely to be able to rent it out.
Correct.
Still the case?
Still the case?
Yep.
Yeah.
So there's a shortage of supply.
Shortage of supply, but I think if you're listening to the media, they're looking at obviously when people come off their fixed rates, there's going to be a surge in rentals because those people that aren't in the purchasing property market are going to then end up in the rental market. So we've seen a bit of a dip. We've seen days on market again, about a week average to rent property out, get up to about 3-4 weeks now, and anticipating that probably towards the tail end of the year, we're probably going to see a surge in rental pricing and competition because those people coming out of the sales market are then going to be in the rental market. So we'll probably see that turn a little bit.
So if I'm an investor and I'm looking to buy in Canberra, is it better for me to try and buy a house or a unit?
It depends what your capacity is.
Well, let's assume I've got a capacity, but let's say I can pay $1.5 million for a house, or I can pay 2 lots of $750 for two apartments. What would I be looking to doing?
Buy the dirt. Always buy the dirt if you can. Canberra, I guess capital value really Parliament Hill it's a really good way to think of Canberra is I guess highest capital growth and the highest rental yields are centralised around the city and around Parliament House. So if you drop a pin 1.5 kilometres from basically the flag and work your way around.
Being the flag at Parliament House?
Flag at Parliament House, it's pretty safe buying. So
right.
Most people with that capacity place their money there because it's got the best capital growth, it's got the lowest vacancy rate, and it's generally got the highest yield for rentals and things like that because we have 25% government sector in Canberra. So
that's 25% of people who work in Canberra are employed by the government.
Correct. Yeah. So if you've got that capacity, I'd be buying some dirt around there.
And is Canberra's population still growing? So in other words, is there, as it did during the COVID period,
1.1%, I think.
1.1%.
I think.
Yep.
From the last time I checked.
Yeah. So it's still in terms of the factors you look at, if you're an investor, for argument's sake, or if you just want to buy something that's going to go in value, you're looking for a couple of things. You're looking for population growth.
Yes.
So Canberra's still growing. You're looking for low unemployment. Now we have low unemployment across Australia, but generally speaking, Canberra has the lowest unemployment in Australia. Is it still the case?
From what I know, we've got the lowest vacancy rate. I think we get a lot of Sydney, Melbourne money in Canberra because we've got the highest average wage, and the government sector is bolt hold for stability. So we don't swing like Sydney and Melbourne do. So it's a pretty stable place to sink your cash, and just core areas. I think if your capacity is under the 1.5 and you're looking for something like a unit and it's yield based, just buy any core infrastructure. Buy near the city, buy near, any infrastructure that's been developed or future development that's going to happen. You'll get a little bit of that capital growth, not so much in the units, but you'll have a stable yield. So if your capacity is your 5 to 700, put it in a unit, but put it somewhere that is going to be bolstered by good infrastructure. And in Canberra, you'll always do pretty well if you run off that metrics.
What do you mean by good infrastructure? You mean like be close to the local pool or gyms, or what are you talking about?
Offices, CBD city. Canberra's broken up into 3 main CBD centrals, not as big as Sydney and Melbourne, but anywhere where there's government offices, easy access to that. Light rail infrastructure. So Canberra's got the light rail now.
Yes, it goes through the guts of the joint.
Goes through the guts of the joint, and it's going to keep going. So if you can be on that arterial, that's a really good place to put your money. Since that was constructed and since they actually completed that, or the first leg of it, the capital growth for the units along that belt line went up by about 15%. So if history repeats itself, it's a good place to put your money.
So my view on Canberra is that it's always been a safe bet, and that is, if I buy something for $500,000, $600,000, I borrow whatever, I'm going to definitely. My risk is very low in terms of never being able to find a tenant. That's one, because it has a low vacancy rate.
Yep.
2, my risk of my tenant losing their job is very low because quite a lot of them especially if it's a 2-bedroom apartment, there's usually 2 people. Could be 3 who are renting it. More than likely, at least 2 of them are employed by the government.
Correct.
In terms of entry price, it's value for money. It's, what I mean by that is it's affordable.
It is.
If I'm borrowing $400,000, I'm a lot less affected by interest rate increases than I am if I borrow $800,000. Even if though my capacity may allow me to borrow $2 million, it doesn't make a difference. I'm less vulnerable to the rate rises because there's a lower principal amount.
Yep.
In terms of if I'm looking for population growth, Canberra is growing because, particularly under the current government, because the current government are big government, so they tend to build their government out, tend to employ more people. The airport, are you still getting lots of international flights coming back now? Have they started to come back?
Started coming back, I think, just recently.
Yeah.
Just recently, but that's been amazing.
Yeah.
That's been really good for the city.
And Canberra infrastructure is pretty good. Like living in Canberra, not that I want to live there, but only because I live up here in Sydney. But it's a good place to live.
It's easy.
You can raise kids.
It's easy.
Safe.
Yep.
Lots of parks, lots of open spaces.
Minimal traffic.
Not much, relatively speaking. Depends on the time of day travelling around, I guess. But generally speaking, it's not that much traffic. You got the light rail now, which is something you didn't have before, but that's pretty good.
Yep.
Particularly if you're buying along that sort of that stream there. And you don't get, unfortunately or fortunately, you're not getting people doing drive-by shootings and shit like that. Like it's a pretty safe joint, a low crime rate.
It is.
And lots of great restaurants and all that sort of stuff. You don't have a beach. unfortunately.
Close.
But a lot of people do have places straight across onto the south coast.
Yes.
That's a big deal, isn't it?
Huge.
Yeah.
We do. We're building at the moment. And again, that's another really good place to put a bit of dough. If you can, that had huge growth up the East Coast when COVID hit, because a lot of people shifted their lifestyles and where they wanted to be. So that's, economically, that did really, really well. But yeah, we've got a place down there. It's only an hour.
You're talking about Bateman's Bay and those sorts of places.
Bateman's Bay, Mollymook, Durras, all those areas.
Yeah.
All the way up to Huskinson and all the way up Jervis Bay. That's where I proposed to my wife.
Yeah.
It's a good spot.
Because those areas are getting their demand from people who come from Canberra, who once again have good, stable jobs. Mm-hmm. And quite a lot of them actually buy there. So how long does it take to get across from Canberra to?
Hour and a half.
Hour and a half.
It's quick.
Makes sense. So you go there on Friday night, there's your weekend, easy. Come back, Monday morning for that matter.
Yep.
So you got 3 nights there. So people who are looking at investing or buying, you're going to get a lot more demand in those sorts of areas than you do in other parts of the New South Wales coast for a particular reason. That's sensible. But the thing that I note in Canberra, other than through the COVID period, but the thing I note in Canberra is your capital yield, your growth, is never anywhere near as good as your rental yields.
No.
So that's what you're trading off.
Yes. Yeah, correct.
So during the COVID period, what sort of growth did we see in Canberra in a capital sense? In other words, the value of the properties.
Capital sense, 30 to 40.
So that's pretty big.
It was big. Again, it's a manufactured market. So and a lot of the driving forces behind that was supply, demand, cheap cash. Not too dissimilar from everywhere else. But the areas that did the best, so those central areas that I mentioned, dropping the pin from the flag and working your way around the city, very very close to that, they did the best, and they've held the best. So we've dropped in Canberra probably upwards to 15 to 20% from 1.5 and under in some areas, but those central areas probably 3 to 5. So they've held well.
Right.
So they had good growth, but they've retracted probably the least over the past.
Okay. So, but generally speaking, going forward, would it be fair to say that the trade-off of always making sure I've got a tenant and low unemployment and low vacancy rates and all that sort of stuff is the trade-off is that I'm always going to be able to service my loan because I get a pretty good yield. The yields in Canberra are pretty good for rentals. I'm talking about.
Can be, up to 6%.
Yeah,
if you got the right tenant and you're buying right.
And that generally will pay most interest rates. Okay,
surplus cash.
Yeah, so you're either going to make a bid or you're definitely not going to be negative.
You're not going to be out of pocket.
Going forward, though, because I think the increase during the COVID period is a bit of an unusual situation. Mm-hmm. Do you see Canberra going back to its long-term capital growth rate?
Yes.
So what are we looking at per annum? What would be a long-term capital growth rate in Canberra?
Probably 12 to 15%.
Per annum?
Yeah.
Yeah, but that's pretty good.
Yeah.
So if your property that you bought grows at 12% per annum, plus you're covering your costs in terms of your rents, that's not a bad return. That's better than you get if you put your money in the bank.
Mm-hmm. Yeah, it's good.
Your upside.
It's stable, and it's a slow burn. We don't get the crazy upswings like you guys, but it is just safe on the bell curve over time. It's consistent. I think we had that drastic spike like everybody else did, but I don't. It's a 1 in 10, 1 in 15, maybe 1 in 20 year event.
Yeah.
But 10 to 15%. For cap growth, yields always sit between 5 to 6, 6.5, depending where you are. I think Sydney's like 3.5 average for a yield across the board.
Yeah,
that's units and houses, obviously, but it's on those metrics. It's safe. That's why a lot of people work there.
Yeah, no, but safety sometimes is a good outcome.
Yeah.
If I was to ask you, and I think it's an important question, because it's such high demand, because it's growing, and you've never really had an oversupply there of apartments in particular.
No.
Is it starting to attract more developers and therefore potentially could create an oversupply?
Definitely.
Because you do project marketing, so you know what I'm talking about.
So we've done a lot of sort of 300-400 size developments up Northbourne, up the main strip, so right where the light rail's going. Most of the land is gone, so most of it's being snapped up. So there's a shorter supply and a higher demand because developers are seeing...
Of new land,
and developers, they're seeing the growth potential, they're seeing the stability of it. Get a lot of international money, a lot of consortiums, a lot of syndicates, a lot of wealth funds interested in Canberra development, and they compete with the local developers. So, and that's probably been the case for probably the last 2 years, and it's really pushed the price up. So
of land. So can I ask you this then? Is there a risk that in terms of supply there could be an oversupply, because the lead time between the developer finding the land, getting the approval, getting the funding, getting it built is like 18 months to 3 years. Let's say developers started doing this to meet the demand that they saw there during the COVID period, let's say in 2020, beginning of 2022, a year ago.
Yep.
Does that mean you've had a lot of developers come in and there may be a slight oversupply of stuff over the next year or so?
Yeah, it could be.
In units, I'm talking about.
Yeah, it could be. And there's a lot of developments in for DA that haven't been approved. They're in that cycle. You know, there's a lot of developments that have been in there for 2 years. They get knocked back, they go back in, they get knocked back. That process can take, I mean, some of the projects we've done can be 4 years start to finish, you know, like plans in, inception to market, pre-sales, you know, cash from the bank to build the thing. It can be 3-4 years, you know, and a lot of this land that's been snapped up, it is still parked in these DAs and you know, they haven't started yet. A big issue with that too is the construction costs. So you're getting a lot of developers that are parking them because construction costs have gone up 40%.
Yeah.
So,
but the price hasn't.
So
they can't pre-sell.
And they're not moving yet. So they're waiting for a bit of a recalibration in the market. And we've had clients where we've sold out 30, 40 townhouses, units, whatever, you know, mid-range stuff, taking those contracts to the bank. The bank said, you know, they've got debt coverage, equity in the land, we've got 100% debt coverage with the contracts, taking it to the bank. The bank said, sorry, since when you bought the block of land, since when you've sold all the off the plan contracts, construction costs gone up 40%. We're not going to give you the money. So then at times it's either park the project, you can't start because the developer's not going to work for nothing, or we've got to go back and ring 40 people and say, look, if you want to keep your unit, you're probably going to have to chip in another 100 each because the bank just won't give us the money.
Yeah.
And that's happening a lot. So I think the bigger guys that are doing, you know, the 200 to 400 size stuff, they're happy to sit on the sidelines and wait. But if they're waiting for the market to catch up to where the build price make it viable, then they're all going to build at the same time, and that's when that oversupply could happen.
Can you see it happening?
Yeah. Could. Just depends what they bought the land for, you know, and what they can build for. And, you know, most people's metrics are going to be the same. Most of builders and developers' metrics are going to be the same. If you're the builder and developer, you probably build first because you can shrink your margins. You can absorb developer margin into the build margin. But if you're just the developer and you've got to pay a builder, well, you're probably going to wait for the market to recalibrate before you build, because you need to either wait for construction costs to come down or the market to align with where you need it. So, who knows? It's like trying to predict the weather, but yeah, it could.
And if I'm looking at investing in a unit in Canberra, because, you know, maybe I'm going to go for a new unit, what's the general sense of people in What's the general sense of people in Canberra about investing on, you know, the 15th level? Because you don't get ocean views, I presume.
We've got a couple of hills. There's 3 hills. There's the Mount Ainslie, Black Mountain, and Mount Majura. They're basically the views you get, and a bit of the lake stuff. But look,
is it a thing though?
It is a thing. It is a thing. You want to look at something. You know, everybody. We're not on Double Bay like I was there this morning. We don't have, you know, yachts in the harbour, but just to look at something. Sunrise, sunset gets more money. Either, you know, top level or ground floor yield the most. Most of your pricing metrics start from the middle of the building and work its way out. Anyway, so that's how a developer will do their feasibility. That's how they work their medium average from the middle of the building. And it's the same in the market. So if you're ground floor and you've got bad knees and bad hips, you're going to look at something that's got no stairs. But if you want to look at something, then you'll pay a premium for it. It's like anywhere.
So if I'm buying off the plan, I'm in Sydney, and I don't intend to go and visit, but I'm going to look at it online. I should be looking at something halfway and above.
For sure.
In terms of, you know, capital growth or you know, attractiveness.
Yep.
What about tenants? Where do they want to live? Where do they want to rent?
Same. It's easy. Whatever's easier to sell is easier to rent. So you'll get better growth with a better view. You'll get a better yield with a better view, and you'll rent it easier, because it's the same reason that it's going to make it easier to resell later is the same reason someone's going to want to rent it quick.
And do the typical things apply, like northeast aspect?
North and east are king. East is sunrise. North is all day light. West in Canberra is really hot. So, but some people like that. You know, south sells last. Nearly every project we've done, there's a sales pattern. sunrise and all day sun. North is really hard to get, depending where, because Northbourne actually faces east. Northbourne's where all the main units are. Like, it's where, most of the developments happened over probably the last 5 years, but it faces east and west. It's very, very hard to get a north-facing unit. So when you do get one and you can position it, it does get more money because there's not many of them.
And is Canberra suffering, or at least experiencing, the same thing that Sydney's experiencing? Something gets put up for lease and there's a line of 50 people coming to inspect it.
It was tail end last year. Now it's not. Now it's definitely slower. Same with open homes though. It's our open home numbers have halved. Auction numbers have halved.
You mean properties put up for auction?
Yeah. So attendees at auctions have halved. People through the door just on the weekends has halved.
But what about numbers of auctions?
Numbers of auctions, I'm not too. I think there's. I'd be guessing, but I'd say from eyeballing, probably 20-30% reduction. But clearance rates are 50%. Whereas tail end of COVID, like everywhere else, it was up about 90, north of 90.
Yeah.
So, seeing a lot more private treaty stock. But yeah, and days on
which
market,
never meets. You're saying is that stuff that never meets auction. It's up for sale.
Yeah,
at a price,
and that's generally getting better prices at the moment.
That's right. So you would say, if I'm a buyer, Mark, you probably get a better deal if you buy at auction than you will if you buy private.
Yeah. And we're sitting at about 10%. So distress selling is only sitting at about 10% at the moment. We haven't fallen off the rates cliff. So I think if you're a buyer, unfortunately, because the numbers are so low, if I was a buyer, I'd be doing the auction circuit and just throwing my paddle up, because that's where we're seeing the cheapest properties sell at auction. And around the country, most of the best prices in Australia are done by negotiating, by private treaty. Auction's a great tool, but in a low absorption market, for a seller, it's not the right tool for your property most of the time. Like, we're still auctioning properties, probably about 20% if it's the right property and we know it's going to get demand. But if you're a buyer and agencies are still doing a method that was great in a high absorption market, well, you're probably going to be the only guy in the driveway. And if that's the case, you're going to have exclusive rights to negotiate. And if that seller needs to sell, unfortunately for that seller, it's probably going to be good news for you because you'll probably get a good deal. When it's private treaty and it's straight negotiating, the prices are generally higher at the moment.
Yep. So, and which is different to what it was a year ago.
Opposite.
So, the opposite. What's it like what's the stamp duty deal in Canberra? So how much stamp duty do you pay and when do you pay it?
Paid at settlement. I think it's 9%, butchering that. But land tax is the big one. Land tax is probably the only thing for rentals that turn people away. I don't know. Do you have land tax in?
Yep.
For rentals?
Yep.
Same around the country.
Yeah. Well, we have land tax in New South Wales.
Only if it's collecting.
We don't have land tax on your principal place of residence. So if you own it, you've got to live there. But if you're renting it out and it's over a certain threshold.
What's the threshold?
I think it's 400. The value of the land is 400, 450 or something like that.
Yep.
You start to pay land tax.
Yeah, sure.
So is that how it works in Canberra?
Similar. But it's I think because the yields are so high, you can offset the land tax. And obviously there's tax benefits. You can claim some back and things like that. But we still do get that interstate money come in because our yields are just high enough that you can absorb a bit of land tax, you can absorb some extra costs and a bit of, the 1% rule on your maintenance. It's just enough to cover that with a little bit of surplus. So that's it all comes back down to the yield, for people, for making it still attractive for people interstate and Canberra.
So are you getting much interstate interest?
A lot. So
are these people finding stuff online, or how do they know about it?
Yeah, Domain. So Domain and realestate.com. So a lot of Sydney, so project marketing. So again, most of the areas we operate are these central areas, these high growth, high net yield areas. And I'd say probably 20-30% of our sales in these big projects were interstate, Sydney, Melbourne buyers. Buying sight unseen, just running the numbers, doing the research. CoreLogic's really good for that. So, everyone's as educated as an agent these days. It was about 20-30% for a period of time there, through the boom. At the moment, because it's a transient city too, so we get a lot of these high net wealth couples and families that come down for government jobs on contract, and again, drop a flag rule, 1.5 Ks. The central areas do still pull a lot of interstate and international interest because it's so central and the cap growth is really, really good. So we still probably see 15-20% of that interest interstate, and then the broader boundaries of Canberra, it's probably more like 5. Just the closer in you get to the guts of it, the more attractive you are to people interstate.
So I'm going to put it on you. If I said to you, I want to buy something for $500,000.
Yeah.
What would you say? Give me a couple places I should be looking at.
If you got $500,000, if you can get it, The Woden CBD is really good.
Woden. Yep.
So look there if you're listening. Dixon, the city, is really, really good. So again,
Can I buy something for $500,000 there?
You could if you're buying off the plan.
Yep.
You got to be savvy. You got to hunt around, but they're around. You get one betties. One betty, you get a one betty for mid fours, which I know sounds crazy, 50 squares, but the yield's really good. So it's good lifestyle if you're moving there for yourself and you got $500,000. It's good lifestyle because you're in the city, you can walk everywhere. It's really, really good.
Let's say I'm an investor though.
Say an investor, yield's probably going to sit at 5.5%. If you can find the right thing, but they're around. So if you're savvy and you're looking and you got time, Kingston Foreshore is really good. It's the only place with a bit of water. If you can get something there for $500,000, there's some older stock in there that you could. But again, if you're an investor and you're looking to depreciate it, Woden is the best at the moment, best value buying, and in and around sort of Dixon and Braddon and those sort of areas, if you can get it.
They're the good areas.
They're the good areas, yeah.
Yeah.
You'll get them. You just got to look.
And in terms of people wanting to rent stuff, should I be, if I'm an investor, should I be trying to buy, do tenants want to buy rent new, or they don't give a damn?
Don't give a damn. As long as it services their lifestyle and services their affordability, and they don't care. You know?
Yeah. So they're not all saying, "Oh, I want to go on one of the latest
not picky
buildings that's just geocon built, and I want to be able to go into because they've got a gym and a pool and
just a roof,
sauna,
roof close to work.
Yeah,
you know? enough that it's affordable, so I can save for my deposit to buy my own one soon.
Yeah,
you know, cost low, lifestyle high.
So do I need to have parking?
Yeah, most of them have parking. I think Sydney and Melbourne, it's common to get a one betty that doesn't have parking. Canberra, they've all got parking. Two betties usually have two. Ones always have one. It's very rare that you're going to buy a unit without parking. I've never sold one.
Really?
Never. Without parking, never. It's very, very uncommon, and I've sold hundreds of them.
But they'll people park if they all got they drive to work, or they just leave the car then walk to work?
There. You can rent them out, so you get $2,500 a year. So if you own a light rail, if you're walking to work, you can rent. Not too dissimilar from everywhere else, but you can get a few grand a year for a car space, which is a pretty good return if you're saving for a little bit of cash and you don't need a car and you're riding everywhere.
And that pays it off.
That pays it off.
And finally, Josh, what about houses? Where would you, if I got, I can afford 1.2 to buy, to spend 1.2, which means they're going to probably borrow 800,000-900,000. Where would you say I should be looking to buy?
The best buying for 1.2 at the moment is the Woden Valley. So Curtin, Garran, Hughes, in and around. It's just outside of the Woden CBD that I mentioned to you. And the inner north, which is just outside of the city, just outside of Braddon, or Braddon is the inner north, but areas like Dixon, Hackett, O'Connor, they're great. If you can get in there now for 1.2, 1.3 if you're savvy. And again, if you're just the only guy on the driveway, you're probably going to get a deal because we're at twice the amount of stock that we had this time last year, and there's half the amount of buyers in the market. So you just got to be there. Right.
And finally, if I don't go for the Canberra Raiders, am I a chance of buying something there, or have I got to?
We'll let you. Yeah, we'll let you.
And do you go for the Canberra Raiders?
I do. I'm a fight man myself. I follow the fight game more. But definitely.
You love the UFC.
Yeah.
And but the Canberra Raiders and Ricky Stewart and all those guys. I mean,
well, they're in Braddon. They're in the middle.
Are they?
Yeah, they're ovals. Yeah, right in Braddon, right in the inner north.
Right.
So if you're buying in Braddon, you're buying a unit, you'll see them all at the cafe having a coffee on a Monday.
Well, that's a good reason to buy an apartment. Go down and then I'll get a
free plug for the boys.
Bump it in a couple with the front row forward or something like that. Like
you'll see them every day. I see them all the time.
Well, Josh Morrissey from Hive Real Estate. Are you guys called Hive Real Estate?
Hive Property.
Hive Property.
Yeah.
Thanks very much. I appreciate giving me the lowdown on Canberra. Always been a Canberra favourite. Like I've always thought Canberra's a great place if you're building a portfolio. You need to have some, buy some property that might go up. You take a bit of risk on it, but you also need to have your steady eddies in there. And Canberra's always been a great steady eddy investment from my point of view. Low unemployment rate, low vacancy rate when it comes to tenancies, good population growth. Everyone's got a job in government or two jobs.
Yes,
both partners. You've got a big airport. You've got great infrastructure. You've got low supply, relatively speaking, low supply. For me, Canberra's just a great place to buy, definitely a great place to invest. But you've got to be careful.
Yeah.
And give Josh a call.
Absolutely.
Thanks very much, mate.
Appreciate it. Grateful. Thanks, mate.